This is Alan Bush with ADMIS. In the stock index futures, we are seeing higher prices in the overnight trade. This taking place after the European Central Bank lowered interest rates in a surprise move, cutting their key interest rate by 25 basis points down to a new record low of 25 basis points. Of course, anything that puts downward pressure on interest rates also is viewed as supportive to stock index futures, as is the case today. However, we did have the U.S. GDP coming in stronger than expected, up 2.8%. The guess was up 2%. Normally this would be considered a bullish factor, but in the current environment, the good news is the bad news as far as how it might affect Fed policy. So a stronger U.S. economy implies that the Fed may taper their quantitative easing program a bit sooner. Our feeling is that this will not have an impact on when they scale back their QE. When the Fed does cut back on quantitative easing, it will probably be much later than many analysts are currently anticipating, which is the first quarter of next year. At least that's the consensus view. So I think I'd stand aside in stock index futures today on a short-term basis. Longer term, this market will continue to be supported by the Fed's extremely accommodative policies. Over in the currencies, the ECB rate cut putting a lot of pressure on the euro currency. However, I do believe that the bad news is out of the way for now. From here, I think we can see a recovery in the euro currency. Also, I think that dollar gains, which were linked to the ECB rate cut, will not follow through. So from here, I would look for lower prices in the dollar index. Don't forget the Fed's quantitative easing program puts downward pressure on interest rates, which is very bearish to the US dollar. So look for lower from here in the dollar index, higher in the euro currency from these current lower levels. Also, the Australian dollar under some pressure after employment numbers coming in rather weak in Australia. However, I think that interest rate differentials will continue to favor the Australian dollar. So look for a recovery today in the Aussie dollar from these current lower levels. And in the credit markets, some offsetting influences. The ECB rate cut was bullish. The stronger than expected US GDP report was bearish. So we are seeing futures just steady. Longer term though, the Fed's QE is the dominant influence that will probably take Treasury futures higher. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland. You're all 780-868-75, so 80, that's 80.